As promised, Navin Agarwal, Director of Motilal Oswal Financial Services, and Rajat Rajgarhia, CEO, Institutional Equities at Motilal Oswal, now join us ahead of the 8th MOSL Eureka conference that kicks off in London later today. Good morning to both of you. Navin, what is the mood like ahead of the conference, given that the market is at fresh 52-week high?
So as far as the foreign investors are concerned, the primary issues that they are seeking to get answers from various corporates in various conferences, including this conference that they will be attending, are, what is the extent of the impact of demonetization that remains in fourth quarter or in the coming quarters. That's something which is on the top of the mind of everybody. The second is the likely impact of GST on many of these companies as GST is set to roll out in the second quarter of the next fiscal year. And the third important point is that this is the time of the year when typically companies chalk out their business plan for the next year, and any peep or look into that business plan for FY18 is of enormous interest to investors. So, I mean, each of these conferences is seeking to answer many of these questions in the mind of various investors, and I'm hoping that investors will go back with some insights on each of these questions as they attend this conference as well.
Well, Rajat, you have a lot of speakers from the financial space in your conference. One of the key speakers is Vishwaveer Ahuja, the MD and CEO of RBL. We've seen many of these non-index, financials do very well. Bajaj Finserv, RBL, all these financials are doing well. Do you see a lot of more scope for these stocks to do well?
We typically pick companies which are the growth engines for the next cycle in the markets. So if you look at the names which are participating in the conference, we are mostly positive on all of them. So whether, as you mentioned, financial services has a large composition within the conference. Banks like Ratnakar are pretty well positioned where they can keep growing their market share. Their overall market share in the banking space is right now small enough for them to keep gaining market, keep growing at a rate of 30–40% for the next few years and keep compounding their earnings. Over the last 2 decades, we have seen enough banks going through this journey, and with a management of the quality of, as you mentioned, Ratnakar Bank, we see this getting repeated again. Similarly, we have other names also in the conference from financial sector, companies like Yes Bank, which continues to compound at 30%, Piramal Healthcare, IDFC Bank, Shriram Transport, and lot more. So the key focus, the key theme amongst all these companies is growth, where they continue to grow very well over the coming years to come.
Navin, the script of this market has changed a bit. Earlier, we used to focus on FII buying, but now it's domestic buying. It's increased so much that it's really been the anchor of this market rally. Do you see it staying that way, or do you get a sense that the foreigner participation could increase as well?
So, answering the point on the domestic investments first, you have multiple trends at work. We have rising financial savings within the household savings mix. We've already seen the financial savings move up from 30% 5 years back to 40% of the household savings. And within that, the share of equities, which used to be 2.5% 5 years back, has risen to about 10% now. We see this trend of rising financial savings to nearly 50% of household savings, rising equity allocation within financial savings to closer to 15% as trends that will likely play out over the next 3 or 4 years. What also gives us this confidence is that you have a rising share of SIP flows within the overall flows. Once upon a time, we had sub 50% of all the mutual fund inflows coming in from SIPs. That number is now upwards of 60–65%, and we see this number only going up going forward, which lends a lot more predictability, a lot more sustainability to these flows. So we would believe that the 10 billion inflow number that you've been seeing year after year for the last 2–3 years will only grow in size because of the rising proportion of SIPs to maybe $12 and then $14 billion. In the meantime, while emerging market asset class is out of favor because of the strong performance of the developed world. Within the emerging market asset class, India continues to remain one of the most preferred destinations. So we believe that the moment you have Indian corporate earnings starting to grow once again, actually delivering a 20% growth, we should likely see the FI flows turning positive once again, notwithstanding the headwinds that the asset class, emerging market asset class is facing. I think the problem is that our own earnings growth, which was expected to be 20% in the second half of the year, and which is now likely to be negligible because of demonetization, ex the metal companies, is what is coming in the way of FI investments. If you were to see this 20% growth come back, I have no doubts that FI flows will turn positive once again.
Thank you very much, Rajat.